My name is Debo Adejano, real estate entrepreneur, MD CEO Realty Point Limited. They call us the circular lot people. And this is Real Estate Business with Debo Adejano. I started a series on unbundling your total financial makeover. Okay, how do you get on track financially? How do you plan to be financially free whilst working and after you probably go into retirement? Very important. And we've done a number of series on this, and this again is another series. Okay, so we're building a structure of 5 floors, ground 0 plus 4, 5 floors. Okay, and we've gone through the first floor. We're on the second floor. We're exploring the apartments in the second floor, and today we'll be exploring the 6th apartment, as it were, in the second floor, because it consists of 7 apartments, as it were. Second floor is a very massive structure as it ends up, as it's looking like, you know. So what role does insurance play in your plan to be financially free, and how should you go about it? Insurance, does it give you assurance? You know, that's what we'll be talking about today. I'll be telling you the critical things you need to look out for and insure, and the things that you probably need to find another solution to, at least as it exists in our own market and industry in Nigeria right now. In the other part of the world, if you're watching, there may be some adaptation that you may have to, consider when it comes to the specifics of what we'll be discussing today, especially one item there, because things may just operate differently in your own environment. I'll be right back. Promises to be very interesting. Insurance, does that mean assurance? Real estate independence fast track course is not something you want to joke with at all. Loads and loads and loads of learning and information and benefits await you at the next one. All you need to do is ensure that you register for your next fast track course. We're looking forward to seeing you. Do you want to be financially free? I hope you know that you will retire someday, and you probably are desirous of doing business with real estate or investing property for yourself, for your use. You need to learn about it before you make that next move. I tell people, you want to buy properties, you want to invest in property one way or the other, don't do it until you attend the next Real Estate Entrepreneurs Fast Track course. See you there. Welcome back. Now, financial planning and being financially free basically rests on you being able to undo a number of things that come up in life normally. So it involves earning money and spending money. Those are the 2 things that are covered if you must be financially free. And what affects how you earn and how you spend is the knowledge you have and your application of that knowledge, the degree to which you are applying, the amount of knowledge you have and the application of that knowledge, the degree to which you are applying it. Those are the 2 major things that affect and impact what you call financial freedom. Now, in things that happen in life, there are a few things you need to ensure, because if you don't have them properly covered, that risk properly covered, they may derail you financial wise. That's why insurance is important, is to help you mitigate such risk. With little money being paid regularly or as stipulated, you cover some risk that may likely occur. In their occurrence, you are covered. And that is insurance for you. That's the advantage. So what are these items that you should look at, and how should you approach them with insurance or without it? 1, you need to have health insurance. If you must be financially free, health insurance is very, very important for you. In fact, I must tell you that now that you can have it cheap, have it. Because when you grow older, it's usually more difficult and more expensive, because they expect that there will be health issues at that age. And so generally in the actuarial science industry, there is how they calculate the risk and the premium, and it's just very, very huge when you are over a certain age. But once you are still young and all, ensure that you are able to manage your health in the sense that you have insurance so that you can draw on it when you need and take care of yourself. And then you stand a chance not to have terrible health situations in your old age also, when you properly take care of that. And health is something that can set you aback unexpectedly. So you don't want to. One of the ways you cover that risk is by going on a health insurance scheme. Okay? Go on a health insurance scheme and cover your health so that when you need it, you can always call on it. Very, 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 very important. So I say that if you are planning to be financially free, take health insurance for yourself, for the people that are depending on you, your family and all of that. If you're a family person, your family, take health insurance. It usually is a lot cheaper on the long run. Yes, in a particular year, you may think that, I didn't visit the hospital, so I just wasted the premium I paid. Hey, but if you aggregate your lifetime, if you aggregate 10 years, 20 years, you will see that it's cheaper for you to take such. So don't risk not having health insurance. That's number one thing, very, very important. Number two, your children's education. You see, the cost of education is rising in the country also, just like it exists in other parts of the world. Education is an expensive business. I can tell you that. What I mean by that is getting your children properly educated can be expensive. Free education can only take you to a particular level, and unfortunately, it's not all the countries of the world that the government can give the citizens free education. Like our own country, it's not free at a starting level. Maybe primary school may be free, some secondary school free, but you also know the quality they offer in those places. So if you don't want those kind of qualities, you want better quality for your children, you probably would have to pay for it. And it's pretty expensive and getting more and more expensive these days. So what it helps to do, what you should do then to mitigate the risk of having your children half-baked, not fully educated or not educated at all, is to plan for their education. Now, I know that the insurance world has a product for your children's education, but funny enough, I'm not too sure it serves the purpose, because the interest rates or whatever that accrues is not really worth sending your kids. It is when you are no longer in the scene, you are not around, okay, that probably some of those insurance can actually be meaningful in terms of giving them some quality education. But whilst you are around, what you get from it really does not insure or does not give proper quality education that much. So I won't say you should go headlong into just any education insurance stuff. I will say you should really critique what it is that they offer, the benefits, and look at your situation. Because if you're doing insurance and you're planning for your children's university education, for example, and all it's going to fetch you is 5 million naira. I don't know what course your children want to do. If you have more than a child, that may not be sufficient to take them through university. Okay, the 4 years or the 5 years they will spend. So I would say explore whatever on case-by-case basis. However, you can have your own plan in trying to ensure that you are able to provide for your children's education. And the earlier you start, the better. I'll give you an example. So for what I did in my own particular situation was that once we had our children, very early in their age, say before they were like about 4, we had bought properties in their name, landed properties that we had to pay over time when we were buying them, such that those properties will be available for them when they are going to the university, for example, or they want to start a business after university. Whenever we need it, it's almost like an insurance for their education. God forbid, even if we are not around by that time, they have opportunities to dispose of those assets and be able to cater to certain things in their lives. So that gives them, because we had time. You can imagine when you buy something for a child that is 4 years old and you'll be needing it probably when he's 18 years, that's 14 years, okay, that thing would have appreciated a lot. Real estate appreciates with time a great deal. When you buy right and you buy under the right circumstance, most of the time you get to benefit a lot from it. And the longer you have, the better the return can be as against an insurance policy. Okay, and then there are also some other products that are tailored towards investing for your kids' education, and they are not necessarily insurance. Okay, there are cooperative products. For example, we have such a cooperative that has something for kids and teens. When you do that investment, it's almost like investing in real estate also, but this time you're buying shares, and the share will keep appreciating. And the more years you have, the better your return on investment. So if you buy the shares when the child is, say, 5 years old, and you will need it when the child is, say, 18, a lot of times I advise parents that plan more for their tertiary education. Okay, as in terms of investment planning, put investment in place to take care of your tertiary education, and try to ensure you can take care of their primary education and secondary education. And I hope you know that one of the wisdom in taking care of their education is to know that knowledge is not just depicted by the beauty and the branding. Okay, it's not just about branding. There are value in some gemstones that are not polished yet. So look out for value, look out for quality in terms of the education, what is being taught, the values in the system beyond the beauty, the razzmatazz in the schools, because a lot of them have razzmatazz, collect your money for razzmatazz, but they are not giving your children value. So that's one way also you can save. So take care of your kids' primary education and secondary education, but try to invest for their tertiary education, particularly ahead of time. I usually say you start once you give birth to them. I mean, if you have the opportunity now that you still are about to give birth, or you've not even gotten married, this is very good for you. So once you give birth to your child, open an account in their name and try to plan in this way. Save money into that account to invest in this way, okay, to be able to grow and save money for their future education or business that they want to do in life, or whatever that they may find necessary to use the money for. Very, very important. Have that special arrangement by yourself, not just an insurance that doesn't really give you so much value for your money. This would appreciate if well done. Buy asset, buy properties, once you have good time, say 10, 15, 20 years gap, that is good time. So take advantage of that time and invest reasonably. You definitely will be able to secure that for your child, okay? And if you need any more information on some of these areas that you can look at, you can contact me. Just contact us through the comment section, say you want more information and all of that. I will get that across to you. One other thing, planning financially to be free. Your vehicles, your assets, you should insure them. Vehicle, for example, you should insure them because it could be, God forbid, stolen, damaged in an accident, things like that. You want to be able to replace it without so much stress and not set your life back a great deal. Okay, so I will always tell people that for people that are financially savvy, you don't just do third-party insurance on a car that will cost you a lot to replace if stolen or damaged massively. Okay, so you want to do comprehensive because eventually they charge you like about 4-5% or even less of the value of the car, whatever you value the car to be. So if the car is valued to be 1.5, for example, you got to pay how much? 60,000 naira if they are charging you 4%. If that car should be damaged or stolen, it means you'll be able to replace it without issue. You want to, and there are so many other benefits you can have from having your car insured. So you want to talk to your insurance broker. You want to talk to a qualified insurance broker and get value. But please explore insuring your vehicles. Make sure you do that. Okay? So that's one other insurance that you should do. The children education, you can have your own plan towards it. The other thing, life. People say you should insure life. I say you should too. If you can. Yeah, if you can. You know why? For me, if you've gone, you've gone. The best you can do is what you can do whilst alive. However, because you may go much early in life than you plan to. That's a fact of life. Some people go when they don't want to go. Okay? You may start out in life having a life insurance. But I tell you that my perspective about life insurance is that you get to a point in life, you don't need it anymore. Because whatever your family are going to get in your departure is almost insignificant compared to what you've put on ground that they can lay hold on when you are gone. So that's it. But when you are just starting life, probably you want to have that put in place so that, just in case, God forbid, your family can be better, provided for once you are gone. But you reach a certain stage in life, my personal opinion, that doing life insurance for the sake of life insurance is not really worth it anymore, because your assets, your valuation and all of that are far more than whatever any insurance policy can provide for your family when you are gone. Okay, so the last one is also your household items. I also tell people, except you have artifacts, you have some very dangerous, some very bad household items. I really don't think that taking burglary insurance is necessary. Yes, you probably want to do, if you have a house, of course, you should insure your house against fire and all of that. That is taken for granted. I hope you know that. But I'm talking about replacing your household items, maybe against burglary, for example, or maybe against fire, getting burnt, everything getting burnt. You may want to consider it, but sincerely, I leave that to your assessment. It could be necessary for some, it may not be needed for others. But look at what you're worth, what you can provide, how easily you can replace anything in your house versus and what you have versus what it will cost you to be doing that insurance and the need for it. That will be my personal opinion again on that. So that is talking about insurance and assurance. I've told you 5 things that you need to consider and what your position should be. Number 1, just to recap, health, very important. You need to insure. Education, beyond insurance, you need to find a solution to how your kids will be trained. Then number 3, vehicle. Told you do comprehensive. And number 4, life. Okay, then household items. Yeah, that may be personal also, depending on what your household item is worth and what it is that it will cost you to insure and to replace. As in your house, home, of course, you should insure that against fire and every other hazard possible. Thank you very much. I believe that you've enjoyed this. Okay, please, if you've enjoyed the video, click on the like button. And if you've not subscribed or you know somebody that you should recommend, now let me do something here. I want you to do something for us, and I wouldn't know what I will promise you, but I promise that I'll be able to give you something. Okay, I will need you to be able to at least send this link to someone. Get at least 3 people to subscribe to this channel, and let us know in the comments that, hey, I got this and that to subscribe. Or privately, you may want to reach us, I got these guys to subscribe and all of that. I promise that there is something of value that I will give to you. Probably give you a ticket for one of our trainings. One of my books that you probably don't have. Whatever it is, I will find something of benefit to give to you. Let's rev up the the subscriber base to this channel. That would be very interesting, Okay, till I come your way another time, I remain yours sincerely, Debo Adejano, in the business of helping you sack your landlord. Thank you. Thank you. I believe you've enjoyed the video that you just watched. You gained a lot, right? Now, let me share with you where they say it all starts. It's called the Real Estate Entrepreneurs Fast Track Course. It's a 2-all-day event. 2 days fully packed, teaching you about real estate, not just teaching you, showing you real estate stuff that you probably would not know. I'll be teaching you as a real estate entrepreneur or someone that is buying real estate for personal use or for investment, one way or the other. This is a course you don't want to miss. There is no tool of its kind in the market. It's the best that there is in the market, and you want to be there. Guess what? It is absolutely free. If it is about real estate and it is about investing, particularly in Nigeria, this is a course that you want to attend. For the value that you will gain, it is absolutely free. All you need to do right now is to click on the link and register for the next Real Estate Entrepreneurs Fast Track Course. As a real estate entrepreneur or as a owner occupier of a house, this is a course you don't want to miss. So see you at the next Real Estate Entrepreneurs Fast Track Course. Click the link below and get registered. Looking forward to seeing you there.